Hey, my name's James Wilkinson. Welcome to my YouTube channel. Now, I wasn't expecting to make this video, but I thought I had to get this out ahead of time. I've moved one of the videos back to on Monday now, and that's because house prices have dropped yet again. Now, this is the fourth consecutive month that house prices have been down. Now, before we jump into this video, because I know the comments get very excited by this, I just want to clarify some things here. Now, I don't have a crystal ball. You don't have a crystal ball. The analysts don't have a crystal ball. Nobody can say for certain where the market is actually going to end up. I just talk about what the analysts are saying and what I feel. And I feel that in any market, whether it's going up, down or sideways, you can still find good deals. And I'm an advocate of buying property and holding property for the long term. Now, if you do that, then there isn't necessarily a bad time to buy, because even if you bought today and the market was to go down a further 25%, but when you bought today, you fixed for a 5-year period, so you know what your monthly payments are and that property cash flows for that period of time, there's a very good probability that in 5 years that 25% will have recovered anyway, and you'll have made all of that cash flow. And so I'm also a big advocate of, when you buy a property, buy something that you can add value. So risky deals at the moment are going to be things like, for example, buying a new build, because a new build property is always overpriced. It always goes slightly down and it takes a while to recover. And that's a strategy that I wouldn't really consider. Normal buy-to-lets, maybe they're difficult at the moment, and we're not really covering that on this channel. We're talking about adding value, rent-to-rent, lease options, all these other strategies that can work in the market. So bear that in mind before you absolutely destroy me in the comments, guys. I'm just delivering what the messenger said, and the messenger today is Halifax. So house prices have dropped 4 consecutive months, and that's something that we've really got to pay attention to. So in October, they went down 0.1%, which is nothing, pretty much nothing. So we didn't really worry about that. That's a blip. That could just be a reporting error. Then the next month, September. Let me just check. Yeah, September. And then October, they went down again, not 1% again. They went down just under 0.5% in October. Now, November's where it started kicking up a little bit, and it got a little more worrying. This was a big drop in November that we saw in last month's data that we had, and that was 2.4%. That's a big drop in a month. Now, in 2008, on average, the prices were going down just over 8 to 10% per year, right, on average. And that took a couple of years to filter through. So if we start getting close to that, then maybe we need to get a little bit more worried. Now, next is December's data, and that's just come out today. And Halifax are saying that we've had another big drop, but it's slowed down slightly, of 1.5%. That's pretty big. And if you carry on like that for every single month of this year, then you're going to have some hefty losses in the property market. Now, should you be concerned? Well, not if you're not looking to sell, right? So this doesn't really impact you. And this is the thing that frustrates me sometimes, is people panic, but they've got no intention of selling a property or even buying a property at the moment. If you're buying, this is good news, isn't it? Because you're going to get a discount on the property that you buy. Because if it's 1.5% down, you can even offer 5% lower than that and get yourself a deal. There's more negotiation to have out there. This will scare people from selling and buying at the moment. So the biggest losers in the market are going to be the businesses that need those transactions. So solicitors, my mortgage broker I'm speaking to at the moment, because I'm doing some refinances, because I want to get a pot of cash to go and buy some of these discount properties. That's what I'm looking at to do at the moment. So I'm releasing equity from a few properties at the moment, getting that pot in the bank. And I'm not going to wait until 2024. I'm looking for deals now because there are some good deals that need to be sold because people need that money for whatever reason. Maybe they need it to expand their business. Maybe they need to sell it because it's in probate. Maybe they need to sell it because it's Section 24 and it's costing them too much money. So there are deals on the market that whatever this drop is, people are selling 10% lower, 20% lower if their circumstances are right and they need a quick sale. So there is an opportunity there. And if you can buy 10% below market value, 15% below market value, or you can even buy at market value, but you can add value to a property, then it's still a good deal. If you can buy a 1-bedroom flat that can be converted into a 2-bedroom flat, should you be worried about the market dropping 10%? Not if you're keeping it. I don't think that you should be really worried at all. You should be just looking for good deals. Do the numbers stack up? Can you get an interest rate that allows you to fix that payment so you can be certain for 5 years, 4 years, 3 years that you're going to know what you're going to pay each month? Is the rent going to be similar? Yes. And those are the fundamentals of property investing. Very easy to get caught up in all of this. House prices are down. Like, we're nearly looking. That's not far off 5%, is it? We're not far off 5% already that the market has potentially dropped in 4 months. But does that need to put you off as an investor? No, because there are other strategies. There's always going to be a strategy which will work. Rent to rent could work right now. Lease options can work right now. Service to combination, HMOs will give you high cash flow in the market. And I know you're going to jump in the comments, some of you guys, and say, well, James is trying to talk the market up. I'm not. I'm telling you, I don't know where the market's going to end up. You don't know where the market's going to end up. We can read all the analyst data that we want, but at the end of the day, if there's a good deal and it can stack up, I can fix it on an interest rate, I can make a return, or I can add value to that property, then I'm still going to go ahead with deals, because this is the time where there are some crazy deals. Last year, the year before, it was really hard. I was in a number of auctions where I wanted property and they just got bid up to silly amounts. I've been looking at auctions today. They're coming to a more realistic price, because an auction, you really want to be getting that property 25%, 30% below market value. For the last 2 years, they haven't been. They've been going for the same price that you'd sell it with an estate agent. So now that's starting to come good again. There are discounts, there's deals to be had in the auction. So if I can buy from an auction 30% below the value of the market, why do I care if the market drops 20%? Even if it does, I've already created some equity in there, 10% left in, right? However, when you buy a property from auction, it's 25% to 30% below the market value, but it's also highly likely that it's a property that you can add value to. It's often not brand new pristine houses that are in the auctions, is it? It's the ugly houses that need the renovation, so you can add more value to that property, and that's going to give you the buffer. So you can build that equity, whatever happens in the market. But the biggest message that I want you to get is that if you can find a deal and you can find an interest rate that works for you, and you can fix that interest rate for a predetermined amount of time, then is that money better invested in that property than sitting in the bank where it's eroding from inflation? I'd say I'd be investing, and that's what I'm looking to do. But you need to do what you're comfortable with. Let me know your thoughts on this. Be kind in the comments, guys. I know you're going to get very, very leery in there because of the, when we talk house prices, that's normal. Do smash the like button, guys. It takes a lot of work to make these videos, and this one's off the cuff, but I thought I'd get that out there today. Do subscribe to the channel, hit the bell notification. There's going to be more opportunities in 2023, 2024 than at any other time. You're clearly interested in investing in property, so subscribe and join us on the journey, see the deals that we're doing, and learn how to do some yourself. Go and grab some of those incredible deals, and I'll see you guys in the next video. Go and check out this one right now. Bye.